Hi there, it's Mark Sebastian, founder of OptionPit.com, and this is my frequently asked questions. Hey, at the top, make sure you're asking me questions every week so that I have good things to answer for you guys. I want to be able to provide you the answers that you need. And then like our page, share it, all kinds of, please let everybody know. Make sure you come to Option Pit and get yourself subscribed so that we can send you an ebook and we can tell you all kinds of stuff about VIX. We do have a webinar coming up that you can sign up for on our website if you go to our website. So make sure you check that out. So today, the question I am going to answer is, Mark, when should I close a trade? And this is the greatest question I get. I get this question constantly. They want to know, when should I close a losing trade and when should I close a winning trade? And so today, let's talk about losing trades. And I'm going to give you some general concepts, not an end-all, be-all rule set, right? Everybody is different. This is just me trying to educate you. This is, kind of how I think. And so generally speaking, when we develop a trade, we are looking at our max loss, kind of what we're willing to eat at onset. How much is the trade risking when I put it on? So for instance, in my trade idea of the week, a couple of weeks ago, this was one that I put together in for Option Pit in our silver membership. Our silver membership, I do a trade idea every week. One of my trade ideas was a long Nike play. And so what I set up was the December 96th, 91, 96 call spread. And so here we go. So I bought the 91s and I sold the 96 call spread. And we paid about $1.70 for it. So you can see right now it's pricing itself, about $1.40. So it's down some, $1.38. It's down some because Nike's kind of sad here. So I have a couple of things in mind when I set up this trade. First, at what point, and this is basically for a vertical, at what point do I cover my shorts on a vertical? Because if we sit around 91, 92, it is entirely plausible that my trade doesn't make money, but my 96 calls that I sold in my call spread no longer carry any value. So yesterday, I closed these 96 calls for 10 cents. So I shut them down. And generally speaking, rule one for me, end all be all rule, is that when an option is worth less than 10 cents and I am shorted, I buy it back. All right. That is a really important rule for me because those little options don't add a lot of value, and holding on to that 10 cents, especially now the commissions are like next to nothing, holding on to that 10 cents just isn't worth it, because now today I'm only long the 91 calls. So as you can see, Nike's up about $1 right now. If Nike goes up another $1, well, if you look at the delta on these calls, they're about a 46 delta. If Nike goes from 90.5 to 91.5, these calls will be worth about $2. And now my entire trade will be up. So that is the risk management approach that I've taken in setting these trades up, and how I've approached putting together this trade. So from a long perspective, two things that I do. When I have a call spread, when I'm long, net long premium. When I have a call spread and I am flat or down a little bit or up a little bit, and my short becomes worth less than 10 cents, I cover it. The other piece is now that I'm left with this 91, it's worth about $1.45. Minus my 10 cents, it's worth $1.35. So I'm off 35 cents on my trade. If I'm long 5 of these, I'm off about $165. I find that instead of using a price on the 91 and a half, so when I'm going to shut these down when they get to $1.25, $1.20, $1.15, I like to use a raw dollar figure to set my max loss. How much am I willing to lose? It depends on whether I am, how many raw dollars I'm willing to lose. So when I set up my Nike trade, I spent about $1,200. And what I said was, I'm not willing to lose more than $500 on this $1,200 bet. And that is really how I set these things up. So one, and these are kind of your two takeaways. One, buy options back that are worth less than 10 cents. Two, use raw dollars. How much actual dollars am I willing to lose on this trade? Don't use a stock price. Don't use a options price. Don't use anything like that. Use a raw dollar. That is how I set it up. Obviously, you can do it your own way. I'm just telling you how I do it. All right, folks, I hope you have a great day and a great morning, and I will talk to you soon.